Okay, so let's talk a little bit about, we're just gonna talk about a couple other things. I'll save the Social Security benefits calculation for Thursday. We'll start off with that. That is involved. And we'll finish up the chapter as well on Thursday. But I wanna get through state and local tax refunds and whether or not they're taxable, and then also unemployment compensation. Unemployment compensation is pretty easy, but this one's a little more complex. Let me see, well, first off, state and local refunds and unemployment compensation are both reported on what's called a 1099-G. Has anybody ever received a income tax refund from Iowa? Yeah, okay, it's on that little annoying postcard thing that you have to like rip open. Yeah, so it doesn't look anything like this, but the information is still the same. It's there. That is reporting the amount of refund that you received from the previous year, state refund. Federal refunds are not taxable, federal refunds are not deductible. State refunds are sometimes taxable, and state tax payments are sometimes deductible. So, if you received one, you're gonna receive a 1099-G. It doesn't mean it's taxable. An additional calculation has to be done to determine whether it's taxable or not. And we're gonna go through that calculation. You can see as well the 1099-G, this is also where unemployment benefits are listed, which are taxable. During COVID, they were not taxable. They had a reprieve of a year or two, I can't remember what, but they are taxable again now. So, whoops, wrong way. All right, so to determine whether or not state or local refunds are taxable, we have to look at what happened last year. And the first question that we have to ask is, did we itemize our deductions last year? If the answer to that is no, you can stop. The refund is not taxable. The reason is because state taxes are deductible as an itemized deduction. So if you received, remember that balance, there's income and a deduction. If you received a benefit from that deduction last year, but you're now getting back part of that benefit, so you claimed that you paid $5,000 in state taxes last year, but then it turns out that you got $1,000 of that back as a refund this year. Well, we've got to offset that because you got too much of a deduction last year, right? But because of timing, you didn't know that at the time, right? So what it's doing is it's making up for that deficit. But if you didn't itemize last year, then you didn't get any benefit from paying state taxes, and so none of your state income, your refund, is taxable. Okay, so that's the first question. Did you itemize, did you deduct state and local taxes last year? Actually, I should say, did you itemize? Well, no, did you deduct under itemized? No, refund's not taxable because you never received any benefit from it, okay? If the answer is yes, now we have to determine how much, if any, is taxable, and it's gonna be the smaller of one of these three. It's never gonna be more than the amount of refund that you received. Okay, so whatever refund you received, that's one of the factors. Or the amount that you deducted last year for state and local taxes, or the amount that your itemized deductions exceeded your standard deduction last year, which essentially would have been what was the total benefit that you received from state and local taxes. So let's look at an example. Got it. So if a taxpayer deducted state or local taxes as an itemized deduction, then the taxpayer must report the refund as income in the year it was received. But it's going to be the lesser of those three amounts. So let's look at an example here. We've got Natalia is single. She had itemized deductions of $14,900 last year. gotta know what happened last year. And you have to know what the standard deduction was last year. Her itemized deductions included $1,150 of state taxes paid. So amount of state taxes paid last year was $1,150. So here we would have to subtract, what was the standard deduction last year? They don't give us this, that's one problem. You might have to look it up. Okay. Yeah, it's simple Google search will give you the answer, but they don't like list it on here. What was this, the?
322.
Yeah.
Or single,
Mm-hmm.
12,950. Does that sound right?
That sounds good. So, 3. Oh, stop. 8, 1, 5, 0, 1, 9. 1950? All right. Yeah, I guess that's right. If that was 950 would be exactly 2,000. Okay, so one option is 1150. One option is 1950. The third option, she received a $120 refund. Refund received is 120. There's option 3. That's how much is taxable, 120, because it's the lesser of those 3 options. Whatever's the least. Okay, there's another example here. Well, same example, but different circumstances. So assume that she reported itemized deductions of $12,990. Now this is no longer $14,900. This is $12,990, which means that this is 40. Now the smallest number of these 3 is no longer 120. It's 40. So that's how much is taxable. So whichever is the least. Because if you think about it, look, if she had just taken the standard deduction, none of it would be taxable. So the only extra benefit that she received was that $40 over and above what she would have gotten. Questions about that? So you do have to look up, you probably will have to look up last year's 2022's standard deduction and some of those problems. Okay. I don't know if they give it to you in the problem. In years past, they haven't. And that has caused some consternation. Questions about this? You want me to take a picture of it? Well, the camera's being used. If anybody wants to take a picture of it, you're welcome.
I wrote it.
You wrote it down, okay. All right. Next one is easy.